It's a top that trade day no matter what. In the house, pro traders Phil Streible and Alan Knuckman. Here we go, guys, with our trader game. Hope you're safe over there. Round number 1, learned lessons. What financial flush outs have you seen in your careers that are similar to this one, and what were the signs the worst was over?
Well, I am an old grizzled trader, so I missed the '87 crash. I was still in college. But there were times the board of trade got flooded by fish that one time. We had to close down for 4 days. And obviously we saw the 2008 financial crisis. So, you know, as a trader, it's about keeping that discipline and not getting into the news too much.
You know, one of the things this most reminds me of is how the U.S. equities, it was almost too easy to make money to the upside. Yeah. It reminds me of that dot-com bubble where people were quitting their jobs, becoming day traders.
Right.
You know, and you got to look when the money's too easy.
And eventually common sense came back. It just took a while, so let's see how long it's going to take. And how will we know when a bottom's in? You'll be able to see it, but you've got to make a bottom base, and then you've got to see how the markets react. And there will be a short squeeze at some time. So it's important to see how it follows through when we get some short squeeze.
Round number 2, seesaw swings. It's been a crazy couple of weeks in the market. How do you handle extreme swings for you and maybe for your customers?
Well, I mean, it looks like it really depends on how you're positioned. If you're overweighted, you use that seesaw swing on the upwards. You take off some of the
extreme
positions.
though. Like we wake up in the morning and the markets are way up, or we wake up in the morning and the markets are way down. Just to understand, you know, to look bigger picture, but you want to sell too soon. You want to get out when things look the best, and maybe get in when things look the worst. And again, have smaller position sizes, I think, is a lesson to be learned from this market action.
I also think that options is a key to this whole thing.
Right.
Acts as life insurance. You're not necessarily going to use it, but it could be there if you need it.
Round number 3, risk control. How can people who are trading and or investing control risk? What is the best way?
Well, the first thing I learned in the pits was keep your hands down, okay? Keep your hands down. Sometimes you don't need to trade. Sometimes you don't have to trade. If the market, you know, stabilizes and moves up and you miss it, so what? It depends on your personality and your risk tolerance, but you don't always have to be in the market.
Yeah, with the way this market's moving, you're going to get another opportunity there. I mean, how many times have we seen that low get hammered again? We're having 1,000-point ranges in the Dow. You're going to get that other opportunity.
And if you look at the market, we're back down where we were in December of 2018. So it's, you know, we've unwound a lot, and it's been a very unkind unwind. It's not been gentle, but another thing to note about this, it happened very quickly. That's usually a good sign. It hasn't been dragged out. So I think the worst news has been built in the market. We'll have to see in the next coming weeks. But that's a healthy thing if it can flush it out fast.
Doing great. Here's your bonus round question for today. Can you name the first spring flower from this list? Is it dandelions, roses, or mums?
I'm going with a mum.
Dandelions, you can make a dandelion salad. So, you know, if we're looking for alternative food sources.
The answer is dandelions.
Angie, you kill me.
Thanks, guys. Great job. We hope to see you back on the trading floor very soon. Business First AM continues right after this. For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.